It's May 15th, 2014, current time 10:43 GMT. It's May 15th, 2014, current time 10:44 GMT. Jay Meisler here with the Daily Forex Trading Outlook. Uh, well, before I start, I want to mention something about volatility. If you look at the current pattern, on Monday we had about a 25 pip range in the euro. Then we had an 85 pip range on Tuesday, a little over 30 pips yesterday, and today we had 73 pips with the bottom so far around 136.50. Now, the reason I mention this is that it's a pattern where 73 pips, 85 pips feels like 800 or 700 pips, given how low the volatility is. That used to not even be a daily range. And now we're really thrilled when we get 50, 60, 70 pips. But the ones in between of 25 and 30 pips are the ones that weigh on your nerves. But if the pattern persists, and tomorrow would be a consolidating day again, we will see what happens. Just a pattern that you have to keep notice of. Now, if you look what happened, we finally took out that 136.70 level, which was I considered major support. We also took out the trend line that comes in today around 136.85 or so. That's a level to watch on the upside. You know, the low for the week prior to today was around 136.89. So the markets, the drop is not surprising. It's only a matter of when, not if, with the European central bankers jawboning it down through threatening or signaling rate cuts and maybe some other measures at the June meeting. One level to watch also is the 200-day moving average. It comes in at 136.25. It's a level I've been talking about for weeks now as key on the downside. So on the downside, you have two levels, 136.50, and the 50 is one of my pivotal levels, and 136.25 is the 200-day. So 136.25 to 50 is kind of like pivotal support. You can notice how the 50 levels are playing. It was a breakdown through it on top, set the bearish bias, first 138.50, then 137.50, now 136.50 becomes important. If we stay between 136 and 137, 136.50 is going to set the tone, but only back above 136.70, and then 137 would slow the risk to what looks like a potential run towards 135s ahead of the ECB meeting. But that's weeks off, and we'll see what happens. Otherwise, look at the 4-hour. Trend is pretty solid. We come down, fail here, which was 137.75, then 137.30, which is the double top I mentioned yesterday, and now the breakdown level today. 1 hour is showing a similar thing here. So if you want to look for today, the market will, sell blips as long as we stay below, say, 137. But 136.70 is kind of be like a pivotal level. We've been trading on both sides of it since we broke back below it. But I think the key today is 136.50. Even if it dips below, it has to stay below. And if it does, we're going to set up a run at 135. If not, we will be in this 136.50, 137.50 level. But the risk is clearly on the downside, especially if we stay below, say, 136.85 to figure. Now, as far as data goes, we have a bunch of data today from the U.S. Weekly jobless claims, CPI, and some I think Empire and Philly Fed surveys. But the key is the CPI report. Now, one talk about that. It's supposed to tick up to maybe a 2% annual rate today, but come back down in May. And one reason is a long Easter and a base effects, they say. So just be aware of overreacting to the CPI number because it's not signaling impending inflation. It seems to be a one-off type of thing and come back down next month. So just be aware of that. Now, one thing, you can look at the bottom of this page. I have a link to an article, 9 strategies you can use in a low volatility market. And we are in low volatility markets, even though we had a 73-point range today. Note yesterday was a little over 30, as I mentioned, and Monday was 25 pips. There are ways to make money in this market. I outline them in these 9 strategies. You should take a look at it. Click on the link. It's embedded in this video. and we will touch base tomorrow.